Top 20 Basic Accountant Interview Questions and Answers. Preparing for an accountant interview requires a solid understanding of fundamental accounting principles and the ability to communicate them clearly. Whether you're a recent graduate or an entry-level professional, being familiar with basic interview questions can give you a significant advantage. This guide covers 20 common accountant interview questions along with well-structured answers, helping you build confidence and showcase your knowledge during the hiring process. 1. What are the primary responsibilities of an accountant? An accountant's primary responsibilities include preparing and examining financial records, ensuring accuracy, and confirming compliance with laws and regulations. Accountants manage budgets, file tax returns, prepare financial statements, and conduct audits. They also help companies improve efficiency and reduce costs. Accountants ensure financial data is recorded correctly and guide strategic decision-making by interpreting financial reports. Their role is essential for tracking cash flow, forecasting, and ensuring an organization's financial stability, integrity, and compliance with legal standards. 2. What accounting software are you familiar with? I am familiar with accounting software like QuickBooks, SAP, Tally, FreshBooks, and Microsoft Dynamics. I have used QuickBooks extensively for small business accounting, including payroll, invoicing, and bank reconciliation. In my previous roles, I've also worked with Tally for ledger entries and tax computation. I am comfortable learning new systems and adapting quickly. These tools enhance efficiency, accuracy, and reporting capabilities, and I believe selecting the right software depends on the company's size, industry, and specific financial processes. 3. Can you explain the difference between accounts payable and accounts receivable? Accounts payable refers to the money a company owes to suppliers or vendors for goods or services received but not yet paid for. It's a liability on the balance sheet. In contrast, accounts receivable represents the money owed to the company by customers for products or services delivered. It's an asset. Effective management of both is vital to ensure healthy cash flow. Accounts payable reduces cash, while accounts receivable brings in cash when collected. Proper tracking prevents late fees and improves collections. 4. What is double-entry bookkeeping? Double-entry bookkeeping is an accounting system where every financial transaction affects at least two accounts, one debit and one credit. This system ensures that the accounting equation, assets equals liabilities plus equity, always remains balanced. It enhances accuracy by providing a complete record of all transactions and reduces the chance of errors. For example, when a company purchases inventory with cash, it debits inventory and credits cash. This method provides transparency, maintains balance in financial statements, and is the foundation of modern accounting. 5. What are financial statements and why are they important? Financial statements are formal records summarizing a company's financial activities. The main statements are the income statement, balance sheet, and cash flow statement. The income statement shows profitability, the balance sheet details assets, liabilities, and equity, and the cash flow statement tracks cash movements. These statements help stakeholders make informed decisions by showing a company's financial health and performance over time. They are essential for investors, creditors, and management, offering insight into operations, profitability, and financial stability. 6. What is working capital? Working capital is the difference between a company's current assets and current liabilities. It is a measure of a business's short-term financial health and operational efficiency. A positive working capital indicates that the company can cover its short-term obligations with its current assets. It reflects the liquidity available to maintain day-to-day operations. Effective working capital management ensures the company can pay its bills, invest in growth, and avoid financial distress. Poor working capital can lead to cash shortages or operational challenges. 7. What is depreciation, and why is it used? Depreciation is the accounting method used to allocate the cost of a tangible fixed asset over its useful life. Assets like machinery, vehicles, and equipment lose value over time due to wear and tear or obsolescence. Depreciation reflects this loss in value on financial statements. It reduces taxable income and helps companies match expenses with revenue generated by the asset. Using methods like straight line or declining balance, Depreciation provides a more accurate picture of a company's financial performance and asset values. 8. How do you handle tight deadlines in accounting? Handling tight deadlines requires planning, prioritization, and time management. I start by identifying the most urgent tasks, breaking them into manageable parts, and creating a schedule. I also maintain organized documentation and use accounting software to automate repetitive tasks. Communication is crucial. I coordinate with my team and supervisors if support or resources are needed. Staying calm and focused under pressure ensures that tasks are completed accurately. I believe preparation and consistent workflow help meet deadlines efficiently while maintaining high-quality work. 9. Can you explain the accrual basis of accounting? The accrual basis of accounting records revenues and expenses when they are earned or incurred, regardless of when the cash is received or paid. This method provides a more accurate picture of a company's financial position because it matches income with the expenses related to earning it. For example, if a company performs a service in June but receives payment in July, revenue is recorded in June. Accrual accounting is generally required under GAAP and is useful for long-term financial analysis. 10. How do you ensure accuracy in your work? I ensure accuracy by double-checking data entries, reconciling accounts regularly, and using accounting software with built-in error-checking features. I follow a detailed checklist for monthly and quarterly tasks and review reports before final submission. Additionally, I stay updated on accounting standards to ensure compliance. Peer reviews and internal audits also help catch mistakes early. I maintain clear documentation for all transactions to make backtracking easy. Accuracy is essential in accounting, as even small errors can impact financial statements and decisions. 11. What is a trial balance? A trial balance is a report that lists the balances of all ledger accounts at a specific point in time. It ensures that total debits equal total credits, confirming that entries are mathematically correct in double-entry bookkeeping. Preparing a trial balance is a key step before creating financial statements. While a balanced trial balance doesn't guarantee the absence of all errors, it helps detect issues like posting errors or incorrect account usage. It's a vital internal control for accounting accuracy. 12. What are the types of accounts in accounting? There are 5 main types of accounts in accounting: assets, liabilities, equity, revenue, and expenses. Asset accounts represent what the company owns, such as cash or equipment. Liabilities are obligations like loans or payables. Equity represents the owner's interest. Revenue accounts track income from sales or services, while expense accounts record costs incurred to generate revenue. These categories help organize financial transactions and form the structure of financial statements. Every transaction affects at least 2 of these account types. 13. What is bank reconciliation? Bank reconciliation is the process of matching the balances in an organization's accounting records with those on the bank statement. It identifies any discrepancies caused by outstanding checks, deposits in transit, or errors. The goal is to ensure both records align and are accurate. Regular bank reconciliations help detect fraud, prevent overdrafts, and maintain accurate financial data. The process involves comparing individual transactions, adjusting for timing differences, and investigating any mismatches. It's a crucial internal control measure in accounting. 14. What is the purpose of budgeting? Budgeting helps organizations plan and control their financial resources by projecting income and expenses over a specific period. It sets financial goals, allocates resources, and ensures spending aligns with priorities. A budget allows businesses to monitor performance, identify variances, and make informed decisions. It serves as a financial roadmap, helping in cash flow management and long-term planning. Budgeting also fosters accountability, as departments must work within set limits. Effective budgeting improves financial stability and supports strategic objectives. 15. How do you stay current with accounting standards and regulations? I stay current by regularly reading updates from accounting bodies like the FASB, IASB, and AICPA. I also subscribe to professional newsletters and attend webinars or workshops. Participating in continuing education and certification courses keeps my knowledge fresh. I use online forums and communities to discuss changes and their real-world implications. Keeping up with regulatory updates ensures compliance and helps me adapt processes accordingly. Staying informed is critical in maintaining ethical, legal, and professional accounting practices in a constantly changing environment. 16. What is the difference between a ledger and a journal? A journal is the initial book of entry where all financial transactions are recorded chronologically as they occur. Each entry includes details like date, accounts affected, and amounts debited or credited. A ledger, on the other hand, is the book of final entry, where journal entries are posted to individual accounts. Ledgers provide a classified and summarized view of transactions for each account. While journals show the sequence of transactions, ledgers help in preparing the trial balance and financial statements. 17. How do you handle confidential financial information? Handling confidential information requires integrity, discretion, and strict adherence to company policies and data protection laws. I only share financial information with authorized personnel and ensure secure storage of documents, whether digital or physical. I use password-protected systems and avoid discussing sensitive matters in public or unsecured environments. Confidentiality builds trust and is essential for maintaining ethical standards. I also stay informed about data privacy regulations like GDPR or HIPAA, depending on the industry, to ensure full compliance. 18. What are adjusting entries and why are they necessary? Adjusting entries are made at the end of an accounting period to update account balances before preparing financial statements. They ensure that revenues and expenses are recorded in the correct period under the accrual basis of accounting. Common types include accrued revenues, accrued expenses, deferred revenues, and depreciation. These entries are necessary for accurate financial reporting and matching income with expenses. Without adjustments, financial statements may be misleading. Adjusting entries provide a true and fair view of a company's financial status. 19. Describe a time you found and fixed an accounting error. At my previous job, I discovered a mismatch in the accounts receivable balance during month-end closing. Upon investigation, I found a duplicate invoice entry that overstated revenue. I traced it back to a data import issue from the sales system. I corrected the entry, informed my manager, and updated the reconciliation report. Additionally, I coordinated with the IT department to add a validation rule to prevent future duplicates. This proactive approach preserved accuracy in our financial reporting and improved workflow. 20. Why do you want to work as an accountant in our company? I am excited about this role because your company values integrity, innovation, and financial excellence, principles I hold dearly as a professional. I appreciate your commitment to continuous improvement and ethical practices. I bring a strong foundation in accounting principles, attention to detail, and experience with financial reporting and analysis. I'm eager to contribute to your team and help streamline processes, ensure compliance, and support strategic growth. Working here offers a chance to grow professionally in a collaborative and respected environment. Mastering basic accountant interview questions and answers is key to making a strong impression on potential employers. By preparing thoughtful, accurate responses, you demonstrate both technical competence and professionalism. Remember to tailor your answers to the specific role and company, and support them with real-life examples when possible. With the right preparation and confidence, you'll be well-positioned to succeed in your accounting career journey.